This is not a drill. 20 minutes ago, the Federal Reserve announced an emergency 0.75% rate cut outside of their regular meeting schedule. This is only the fourth time in history they've done this, and the last three times led to absolute economic chaos. But here's what's really terrifying. This wasn't planned. This was panic. And the dollar just had its worst single-day drop in 15 years. Markets are in complete freefall, and I'm about to show you why this emergency rate cut isn't saving the economy. It's confirming the collapse is already here. In the next 17 minutes, I'm going to reveal the secret reason the Fed made this emergency move. It's not what they're telling you. Why this rate cut is actually accelerating the dollar collapse. The timeline of economic chaos that's about to unfold. And the three groups of people who are about to get financially destroyed. But first, let me show you the market data that's causing absolute panic in Washington right now. Right now, as I'm recording this emergency update, the financial markets are in complete meltdown. The Dow Jones is down 847 points. That's a 2.1% drop in just 3 hours since the Fed announcement. The S&P 500 has crashed below key support levels, and the Nasdaq is having its worst day since March 2020. But here's what's really scary. Look at this chart of the US dollar index. The dollar just crashed 1.8% in a single day. That might not sound like much, but for a currency, that's massive. To put this in perspective, the dollar typically moves 0.1% or 0.2% per day. A 1.8% drop is what we call a currency crisis. And it's not just stocks in the dollar. Bond yields are going crazy. The 10-year Treasury yield jumped from 4.1% to 4.6% in just 2 hours. That's the bond market screaming inflation is coming back with a vengeance. Gold shot up $73 per ounce, the biggest single-day gain in 2 years. Bitcoin spiked 11%. Oil jumped $4 per barrel. Every single inflation hedge is exploding higher because smart money knows what this emergency rate cut really means. The Fed just told the world that something is so broken in the financial system that they couldn't wait for their next meeting in 6 weeks. They had to act today. And when the Fed panics, you should be terrified. But here's what really makes me angry about this whole situation. Because the Fed is lying to you about why they made this emergency cut, the real reason has nothing to do with helping the economy. The Federal Reserve is telling you this emergency rate cut is about supporting economic growth and ensuring adequate liquidity. That's complete nonsense. Here's what's really happening behind the scenes. 3 major banks were hours away from collapse this morning. I can't name them yet because the information came from a confidential source, but think major regional banks with exposure to commercial real estate. The Fed got emergency calls at 6 a.m. that these banks needed immediate liquidity or they'd fail before markets opened. But here's the problem. When you cut rates in an emergency, you're not solving the problem, you're creating new ones. Lower rates mean a weaker dollar. A weaker dollar means higher inflation. Higher inflation destroys purchasing power and crushes the middle class. The Federal Reserve is trapped. They have to choose between saving failing banks or saving the dollar. Today, they chose the banks. And that choice is going to destroy millions of Americans financially. Look at this data from the Federal Reserve's own balance sheet. In the last 30 days, they've increased emergency lending to banks by $127 billion. That's not normal operations, that's crisis management. They're literally printing money and handing it to failing banks to keep them alive. But every dollar they print makes your savings worth less. Every emergency loan they make accelerates inflation. Every rate cut they announce brings us closer to a currency collapse. And the worst part? This emergency rate cut won't work. Interest rates were already near historic lows. Cutting them another 0.75% won't magically fix $2 trillion in bad commercial real estate loans. It won't fix the housing crisis. It won't fix the government debt crisis. All this rate cut does is confirm to the world that America's central bank has lost control. Now, this is the part that terrifies me the most. Because this emergency rate cut isn't happening in isolation. There are 4 factors converging right now that are turning this into a perfect storm. $1.7 trillion in commercial real estate loans are coming due in 2026 and 2027. Most can't be refinanced because property values have crashed 30 to 40% in major cities. Empty office buildings in New York, San Francisco, and Chicago are worth 50% less than their outstanding loans. When these loans default, and they will default, it wipes out the banks that made them. That's why the Fed is panicking today. They can see the tsunami of defaults coming, and they're trying to get ahead of it. The US government now spends $1.2 trillion per year just paying interest on the national debt. That's more than we spend on defense, education, and infrastructure combined. And with $34 trillion in total debt, every 1% increase in interest rates costs taxpayers an additional $340 billion annually. By cutting rates in an emergency, the Fed is admitting they can't let interest rates rise or the government goes bankrupt. But keeping rates artificially low destroys the dollar's credibility as the world's reserve currency. China sold $53 billion in US Treasury bonds in the first quarter of 2026. Japan dumped $31 billion. Saudi Arabia is pricing oil in yuan for Chinese customers. Russia and Iran are trading in their own currencies. When foreign countries stop buying our debt and start selling our currency, it creates a self-reinforcing collapse. Less demand for dollars means lower dollar value, which makes foreign countries want to dump even more dollars. Regional banks hold $2.9 trillion in underwater assets, mostly commercial real estate and long-term bonds they bought when rates were near zero. As rates rose, those assets lost massive value, creating huge losses on bank balance sheets. The Fed's emergency rate cut is trying to stop more bank failures, but it's too little, too late. The damage is already done, and lower rates won't fix underwater assets overnight. But here's where this gets absolutely catastrophic. Because when the dollar collapses, it doesn't just hurt investors and banks. It destroys ordinary Americans in ways most people don't understand. The impact of a dollar collapse isn't equal. There are three groups that get completely wiped out, while the wealthy actually profit from the chaos. If you're retired and living on Social Security, pensions, or fixed annuities, a dollar collapse destroys you. Your income stays the same, but everything you buy gets dramatically more expensive. Look at what happened in countries like Turkey or Argentina when their currencies collapsed. Food prices doubled within months. Energy costs skyrocketed. Medicine became unaffordable. Seniors on fixed incomes saw their purchasing power cut in half virtually overnight. With 54 million Americans on Social Security and millions more on fixed pensions, we're talking about the largest destruction of retirement wealth in American history. If you've been responsible and saved money in bank accounts, CDs, or money market funds, a dollar collapse wipes out decades of savings. Not because you lose the dollars, but because those dollars buy so much less. $100,000 in savings today might buy what $50,000 bought before the collapse. Your life savings gets cut in half through inflation, and there's nothing you can do about it. The middle class always gets destroyed during currency crises because their wealth is held in the collapsing currency, while the wealthy hold real assets that go up in price. This one's counterintuitive, but people with massive debt actually benefit from dollar collapse, while people without debt get hurt. If you owe $300,000 on your mortgage and the dollar loses half its value, you can pay off that mortgage with much cheaper dollars. But if you don't have debt and are trying to buy a house, car, or start a business, everything becomes unaffordable because asset prices skyrocket while your dollar-denominated savings lose value. Here's the timeline of how this dollar collapse unfolds, based on what we've seen in other countries and what's already starting to happen here. Central bank cuts rates in panic. Markets initially rally on cheap money, then crash as reality sets in. Currency starts declining against major trading partners. Foreign countries accelerate dumping of dollar assets. International trade agreements start pricing in other currencies. Dollar loses 15 to 25% of its value. Import prices skyrocket. Gas, food, electronics, and medicine become dramatically more expensive. Inflation hits 15 to 20% annually. Social unrest begins. Regional banks collapse in waves. Credit markets freeze. Stock market enters long-term bear market. Real estate crashes in dollar terms but explodes in inflation-adjusted terms. Government faces choice between defaulting on debt or printing money to pay obligations. Either choice destroys remaining confidence in the dollar. The scary part? Once phase 2 begins, the process becomes irreversible without massive pain. And today's emergency rate cut suggests we're about to enter phase 2. But wait, it gets worse. Because there are 4 catalysts that could accelerate this timeline from years to months, and 2 of them are already happening. If one of the top 10 US banks fails, it triggers a global crisis of confidence. Today's emergency rate cut suggests we're very close to this scenario. When a major bank fails, foreign investors panic and dump all dollar assets, not just banking stocks. Congress has to raise the debt ceiling again by September 2026. If they don't, or if they engage in brinksmanship like previous years, it could trigger the first ever US government default. A default would destroy the dollar's status as the world's safe haven currency. If Saudi Arabia officially announces oil trading in yuan, or if there's a major disruption in Middle East oil supplies, It could break the petrodollar system that's supported the dollar since 1971. Without oil demand driving dollar demand, the currency becomes just another piece of paper. If political pressure forces the Fed to directly finance government spending, essentially printing money to fund the budget deficit, it destroys any remaining confidence in the dollar. We're already seeing politicians call for the Fed to fund infrastructure spending directly. Any of these catalysts could turn a gradual dollar decline into a rapid collapse. And today's emergency rate cut makes all of them more likely. Okay, so what can you actually do to protect yourself? Because hoping the government fixes this isn't a strategy. Move some savings into inflation hedges: gold, silver, real estate, or inflation-protected securities. Not all of it, but 15 to 20% as insurance. Also, pay down variable rate debt before interest rates spike higher. Consider assets that perform well during currency crises: real estate with fixed-rate mortgages, commodity stocks, international stocks, and physical precious metals all tend to hold value when currencies collapse. Develop skills and income sources that can't be inflated away. Learn trades, start businesses, or invest in education that increases your earning power. Also consider geographic diversification, having some assets outside the US. Don't panic and make dramatic changes overnight. Don't go all in on any single strategy. Don't ignore the possibility that the Fed pulls off a miracle and stabilizes things. Prepare for the worst, but don't bet everything on it happening. Build your emergency fund in physical assets, not just cash. When currencies collapse, cash becomes worthless, but food, water, medicine, and basic necessities retain value. Look, I wish I had better news, but today's emergency rate cut isn't a sign of strength, it's a sign of desperation. The Federal Reserve just admitted they've lost control of the financial system. When central banks make emergency moves outside their normal schedule, it's because something is broken beyond repair. They're trying to buy time, but they're making the underlying problems worse. The dollar collapse isn't coming. It started today. Every emergency measure the Fed takes from here accelerates the timeline. And millions of Americans are about to learn the hard way that when currencies collapse, ordinary people pay the price while the wealthy and connected profit from the chaos. This is the most dangerous financial moment since 1971 when we went off the gold standard. The difference is that this time, there's no safety net. The dollar is the world's reserve currency, and when it falls, there's nowhere to hide. That's your emergency market update for today. This is developing fast, so subscribe to News Radar Daily and hit the notification bell. I'll be covering every development as this crisis unfolds. Drop a comment below. Are you seeing the panic in your local banks? Are you preparing for dollar collapse? Or do you think the Fed can stop it? I'll see you in the next emergency update. Stay informed, stay prepared, and protect your wealth before it's too late.